Hello everyone, this is Kritika, Assistant Professor, Department of Economics, St.Joseph College of Arts and Science. The subject is Indian Economy, the subject code is AECM43S. In this chapter, we will see concepts of national income in Unit 2. First of all, what is national income or what is mean by national income is national income means the value of goods and services produced by a country during a year or during a financial year current year. The national income is the total amount of income of the every economic activities in the particular year or particular time. So it includes payments made to the all resources or then the resources means wages, interest, rents and profits. So national income plays a very important role in the economic development. The concept of national income occupies an important place in economic theory. A country with a high national income will grow faster than the otherwise the lower national income. So in which country placed a higher level of or contributed a higher level of national income, it is the sign of economic development. So what is the exact meaning of national income? National income means the total income of people of a nation in a year. The net aggregate performance of a economy in a year. In simple words, it is aggregate money value. Aggregate means whole money, whole or total. It is the aggregate money value of goods and services produced in a country during a year or particular year. So in the process of calculating national income, there are several adjustments are made to the account in the missionaries plans apart from the other social costs. So national income is the total of the all incomes earned by different factors of production. So in the factors of production means land, labor, capital, organization, the different factors of production. So the important points of national income is expressed in the terms of money of a country. So how much money available in the country, it is included in the national income. It is refers to 1 year or a particular year. So N is a annual income. N is a annual income. So national income is calculated every 1 year. So definition of national income. National income has been defined various and different angles. Generally it refers to money value of goods and services in the annually produced in the economy. So there are three different ways to defining national income. Different authors define a different angles of national income. The first, Marshall defines national income as the labor and capital resources of a country, natural resources produced annually, a certain net aggregate of commodities, materials, it includes services, all called a national income. So another one is Professor P, who defines national dividend is the part of the objective of income of a community, including income derived from abroad, which can be measured in money. So next final one is both Marshall and Pigou define national income from production, but Irving Fisher approached the concept of consumption effect. So Irving Fisher defined the national income dividend or income consists solely of services are received by the ultimate consumers, whether from the material or the human environment. The general explanation, according to Central Statistical Organization CSO, national income is the sum of total of factor incomes generated by the normal residents of a country from wages, rent, interest and profit in a accounting year. Formula of national income: C plus G plus I plus X plus F minus D. C denotes the consumption of people, G denotes the government involved expenditure, I denotes the investment, and X denotes exports, and F denotes the foreign production, and D denotes the domestic production. So it is all the formula of national income. How we calculate the national income? So like that we have to calculate the national income. Next, I am explain here the important concepts of national income. The first one is gross domestic product GDP. Second one is gross national product. Next one is net national product, personal income, disposable personal income. The final or last one is per capita income. So let's see one by one. What is GDP? Gross domestic product. Gross domestic product, it is the total market value of final goods and services currently produced within the domestic territory or within a country in a given year. So it is called a GDP. So total value of goods and services produced within a country, it is called a GDP. So there must be a noticed three things. The first one is it measures the market value of annual output of goods and services currently produced. Currently produced means given year or 1 year. So it is full of the monetary measurements. Second one, for calculating GDP accurately, all goods and services produced in any given year must be counted only once. So we have to avoid a double counting. So GDP should include the value of only final goods. Final goods means ready for consumption. It is called a final goods and services, and ignores the transaction involving intermediate goods. Intermediate goods means or raw material goods or semi-finished goods. It is called a intermediate goods. So last one is GDP refers to the, so okay, we have to see what is double counting, how we have to avoid the double counting. So here I will give the some example of double counting. If a manufacturing sells a soba to a retailer for rupees 3000 and the retailer sells to the consumer rupees 5000. So how much has the soba contributed to GDP? It is 8000. It is wrong. If we have to should avoid a double counting, we should either count final value 5000 or value order the each stage rupees 3000 plus 2000 by retailer. So 3000 by manufacturer and 2000 by retailer. So it is called a double counting. So we have to conclude in the double or 3000 plus 5000, it's a 8000 means it is double counting. We only calculate the 3000 plus 2000 5000, it is a single counting. So we have to avoid double counting in the national income. So last one is GDP refers to the value of goods and services produced within the domestic territory, or I am already told within the country, within the territory, it is called a GDP. Second one is gross national product, GNP. Gross national product is the total market value of final goods and services produced in a year. So GNP includes the net factor income from abroad plus GDP does not. So it means we have to conclude domestic product plus foreign product. It is called a GNP. So GNP, the formula is GNP equal to GDP plus net factor income from abroad. So it means domestic production plus abroad or foreign production, it's also included in the GDP. So GNP. So GDP means we have to calculate a goods and services produced final year or current year income, it is called a GDP. So we have GNP means plus GDP plus GNP, it is called a gross national product. So in GNP we have to calculate it in two methods. First one is income method or second one is expenditure method. So income method we have to base the country's income, it is called a income method. The income method, the value of consumption goods which are currently produced. Second one is the value of capital goods produced and defined as a gross investment. It includes depreciation or replacement allowance. Next one is the value of government expenditure on varied goods and services. Next one, the value of net exports. The difference between total exports and imports must be taken. Next one is the net amount earned from abroad. The next one is indirect taxes. The aggregate of all these incomes will give the GNP. It represents the final products ready for the consumption value at the current market prices. So it is a income method. The second one is expenditure method. So we have to based on the expenditure, what the expenditure we have to made in the year, particular year, it is called the expenditure method. Under this method, the following items of expenditure are to be added. The first one is personal consumption expenditure, gross domestic investment, government purchase of goods and services, net foreign investment. GNP must be frequently used in national income concept. It is the better index of another concept. It is also statistically a simple one. At the same time, it is not net measures of the national economic performance. So, in national income, the GNP, it's a very important method because there is an income method and expenditure method also included. Next one is net national product. Net national product, NNP. NNP is the market value of final goods and services after providing for the depreciation. That is, when charges charged for depreciation are deducted from GNP, we get NNP at the market price. So, it is another very important concept of national income analysis, and it refers to the net production. Net production means we have to minus our depreciation and we will get some amount. It is called a net national product. Net production of goods and services in a country during the year. So, in calculating NNP, we have to deduct depreciation from GNP. So, in GNP, in the overall production of goods and services in a year, we have to minus the depreciation, then we will get NNP. NNP means market value of all final goods and services after providing for depreciation. So, it is called a national income at market. NNP is a better concept than GNP because it makes a proper allowance for the depreciation. NNP is useful for study of the whole economic growth. So, the formula of NNP is equal to GNP minus depreciation. So, in the year, given year, what we have to spend the depreciation of machineries, tools, which amount we have to spend, we have to minus the overall production of goods and services income, we have to minus, then we will get the NNP. So, it is called a net national product. Next one is national income. NNP at factor cost or national income is the sum of wages, rent, interest and profit paid for factors of the production and contribution of production of goods and services in a year. So, in the factors of production means land, labor, capital, organization. In land we will get rent, in labor we will get wages. So, like that it is the how we will get this national income. So, it is also known as factor cost. This is the total of all income payments received by the factors of production like land, labor, capital, organization. It can be from the NNP. So, NI, the formula is NNP indirect taxes plus subsidies profit accruing to the government. The concepts of national income, the distribution side of national income. It's closely related to the concept of economic development. The next concept is personal income. Personal income is the sum of the incomes actually received by the individuals or households during or given year. In national income, there are some of income which is earned by not actually received by the household, such as social security contributes or corporate income tax and undistributed profits. On the other hand, there are income transfer payments, income transfer which is received by not currently earned, such as old age pensions, unemployment, in relief payments. So, in the old age pensions we will get, it is the transfer payments. Thus, in moving from national income to personal income, we must subtract income earned but not received and add the incomes received by the not currently earned. So, here personal income is the sum total income actually received by the person from all the sources in the form of current transfer payments. The transfer payment will example of old age pensions. In the widow we will get, in the disabled people's get income, it is called a transfer payments. So, PI is the income which is actually received by the individuals or households in a country during a year. From national income, several deductions like corporate profits and then Corporate profits means the taxes, social security contributions are made to arrive a personal income. The personal income formula is national income minus social security contributions minus corporate income taxes minus undistributed corporate profit plus transfer payments. The next one is per capita income. The term per capita is derived from Latin word which is mean by head. The per capita income of a location is says measures the amount of money earned by every person in that area. So personal income is the average income of people of a country in a particular year. It is called a per capita income. So in the simple term it is a income per head. So listen, so in the simple term means income means per head of a country for a year, it is called a per capita income. Per capita income can be derived from the national income by the total population of the country. So here we will see the formula of per capita income. Per capita income equal to national income divided by total population. So since per capita income is calculated in the basics of national income, it can be referred as a per capita income, per capita GNP or per capita NNP, per capita GDP. So the concept of PCI means per capita income, is very useful to single and mostly commonly used to measure the average income and the standard of living of people of a nation. So these all things are the concept or important concepts of national income. Thank you.